good afternoon, everyone, and welcome back to Supply Chain Chat. I'm your host, John Barone, and this is our sixth episode of the bi-weekly series. Again, my thanks to our producer, Janet Cohen at Market Vision, and a special thank you to our co-host, the National Restaurant Association Supply Chain Expert Exchange, and to Matt Riddleberger of Firehouse Subs, the current chairperson of that group. Before we get started, a quick reminder that the Market Vision virtual fall conference is just 6 weeks away on October 21st through 23rd. We have 200 supply chain professionals and 75 suppliers already signed up. Today would be a great day to register if you haven't done so already. So it's been a couple of months, 3 months since we launched Supply Chain Chat, and I had an epiphany late last week. Wouldn't it be a good idea if I actually interviewed a supply chain professional? So I scratched my head and I thought who I could text over Labor Day weekend who would actually respond to me. And today's guest is both a colleague and a good friend. Charlie Lousignont is Chief Supply Chain Officer for Brinker International. Previously, Charlie has held similar positions for P.F. Chang's, Aramark, and at Centralized Supply Chain Services, the Dine Brands Co-op. Charlie is the immediate past president of the NRA's Supply Chain Expert Exchange, where the two of us have had the honor of serving on the board together for the past 8 years or so. So today we're going to get a feel for how one of our publicly traded iconic brands navigated their way through the pandemic so far. Charlie, welcome. Nice to have you today.
Thanks, John. Appreciate you having me. And of course, now that you've blown my cover that I basically on important holiday weekends do nothing but sit around by my phone and waiting for somebody to text me. So it was the highlight of my weekend.
Well, thank you. And I have to admit that I may have a tough time keeping a straight face through this entire interview. So, all right, so let's get started. I think all in the audience today would agree that this has been the most challenging year of their careers. Even prior to COVID in the US, a January lockdown in China began hitting US supply chains. Charlie, how was Brinker affected early on, like January, February, by supply chain issues?
Yeah, it's interesting. What I would say that we weren't really affected January, February. We were kind of watching things, right? Saw a little bit of rumblings with gloves and things like that, but nothing that I would say was definitive. It was more just kind of keeping our eye on things. But obviously, once we were in full-blown pandemic mode, we went from kind of normal volumes and boom, we're slamming on the brakes to our supply chain, stopping production of everything, and just really trying to react to the new normal of the sales volume.
So I saw that a lot of chains, actually heard from a couple of the larger chains that they had to front some big dollars to some factories in China for PPE. How did you guys do with sanitation supplies and PPP to keep or PPE supplies to keep the stores open?
Yeah, so it's not as if we added any new PPE supplies for the most part. But what we did is greatly increase our usage. So take, for example, hand sanitizer. So I think the challenge was knowing that we were trying to increase these items, but not really knowing how much they were going to increase, right? Just trying to calibrate, what the new normal was going to look like. We were fortunate we didn't have to upfront any money. I mean, we certainly were willing and to do that if that came to pass, but that never really was an issue for us. I think the other thing, we were in a little bit better position as a casual diner and a user of alcohol, that many of our alcohol suppliers converted their lines to producing hand sanitizer. And so we had a little bit more of a connection to come up with some solutions. Of course, the challenge there was to train our team members when they saw a handle come in the back door to make sure you look at the label and definitely know the difference between vodka and hand sanitizer.
Well, I think they might get you to the same place if you really wanted to chug it.
I'll
Uh,
leave that up to you.
I saw that. I know that several larger chains that we talk to frequently, one had put several $1 million up front with a supplier they had not been doing business before, and one of the other bigger chains is sitting on some product that they're over ordered on at the higher price levels, and it's you guys were able to avoid that. Good for you. So moving on, distribution has been probably one of the biggest concerns for most chains. I know Cisco and USF have been operating with reduced staff and reduced services. What adjustments Brinker had to make, if any, on distribution?
Yeah, again, tale of kind of two momentum shifts, right? The first one, as I mentioned before, just stomping on the brakes, taking restaurants that were having 2 deliveries a week, ratcheting that back to one. In a couple of cases, actually no deliveries, when we actually had to shut some restaurants down. So that was the biggest challenge. And we tried to work really closely with our distribution partners on that, recognizing they had a lot at risk. And, so we really tried to partner and do that in a coordinated manner. But then, we were fortunate because we quickly were able to pivot back, and because we had already had a strategy in place with to-go and takeout, and one that was really driving results, pre-pandemic, we were very fortunate that we got back close to pre-COVID levels pretty quickly. And so, in that regard, we kind of made things tough for our distributors again, because we went to reducing deliveries to suddenly going, okay, we need to have more deliveries. And of course, the mix shift changed. And I don't think this is any surprise, but our average cube went up dramatically. We're now selling a lot more packaging items, and in the casual dining space, unlike QSR, the minority of our products pre-COVID were going out into the dining room, and so now post-COVID, it's almost 100%. So a lot of changes that we had to adapt to there.
So were there any dead inventory situations, or were you able to manage that?
Well, of course, there was no getting around produce and dairy items, right? Things that had really short shelf life items. And, and there, again, we tried to partner with our distribution partners and produce suppliers to try to, find some common ground there, because obviously just pushing that problem to them wasn't a good solution either. And where we could, if we had products that were coming in fresh we had the ability to freeze them, we would do that. But yeah, we had some liability that we absorbed. But again, fortunate that it wasn't an extraordinary amount of product, so we were able to get through that reasonably unscathed.
So is this distribution back to normal? I hear the distributors are still very limited on drivers, on warehouse staff, on.
Yeah, no question about it, and that varies by distributor and by part of the country. I would say though that a lot of the activity that drives some of the complexity, just in terms of promotional activity, LTOs, those are pretty much we've pushed a pause button on. And so I think that's helped, at least from our perspective. We're a little bit more distributor friendly, because we're not kind of business as normal yet. Our volumes are near pre-COVID levels, but in terms of our overall activity with new SKUs, new product development, things like that, it's not nearly as active as it would have been a year ago.
So on the distribution side, were you able to use any third-party logistics companies? I mean, did you up that, or was that business as usual?
No, that's it's kind of funny. This has been, as you know, it's been a kind of winners and losers. Our packaging spend is up over 200%. And so we've had those kind of changes. But as far as the 3PL, again, we always had, we got some great 3PL partners and worked very closely with them pre-COVID, but boy, they really came to bat for us and delivered a lot of value during this whole crisis and continue to do so. So yeah, definitely a much bigger role they played during the pandemic.
Do you see that role continuing? I mean, on the distribution side, is there a new normal going on, or is you think things will settle back in after a while?
It's hard to say. I think, obviously when we had some situations we were trying to get PPE out to the restaurants and do it really quickly with limited supplies, they had a role. We're kind of past that. So in terms of some of the value adds that they provided there, that's not there. But I would say that how we leverage them is up, but not nearly to the peak that it was during the peak of the crisis.
Okay. We started out Supply Chain Chat a few months ago with a presentation by Damu at Smithfield. How did meat plant closures affect Brinker's supply chain, if at all?
Yeah, no, it did affect it. I think it was, we definitely, and still to some degree continue this, we apply the duck mentality to how we've managed supply chain. We might look and appear calm on the surface, but underneath the water, we are, paddling furiously. And so we had a lot of near-death experiences on proteins. And interestingly, Smithfield is one of our partners, and there were a couple of moments when, some of our buyers weren't sure they were going to get product in time. But again, we were able to avoid most of the severe outages that some of our peers experienced, and very fortunate in that regard. But look, going forward, anytime that you have the potential of COVID outbreak, and we've had some as recently as last week where a plant has to shut down just for a few days, that disrupts production schedules, and so we have to react accordingly. And nobody can predict when and where these are going to happen.
So the solution to that on both ends would probably be maintaining larger inventories, which I'm sure the distributors are pushing back on. Pushing back would be a very kind way to put it. But yeah, but if you get to be a very large chain, and I think we're, one of the larger chains, and I would say this would probably go for a mid-tier chain as well. It's not as if your supplier and the distributor, and there's just this abundant supply of warehouse space where you can build that inventory. So even getting past the will they do it, it's a matter of physically, where do you put it? We have certain SKUs that if we add, 10 days worth of inventory, that's, 20, 30 truckloads. Where's that going to go? So there are some real constraints for some of the larger chains. We heard a few weeks ago that further processed meat items, pepperoni in particular, has been in the news. Have you experienced any particular product challenges? We'll put it.
Yeah, so I actually had forgotten that we buy pepperoni. We use it on a kid's pizza, and so obviously, like everyone else, I was aware of the pepperoni shortage, but until the category manager who manages pepperoni, who kind of came in panic-stricken and just basically said, "I'm about ready to run out of pepperoni," because whatever our nominal usage is, they were scrambling to get that. So fortunately, she was able to find a solution. But that we fortunately, it's not we're not one of the pizza guys, and we depended upon it for our lifeblood. But yeah,
got some antipasto over at Maggiano's. I'm sure might have been affected a little bit.
A few items, yeah.
So let's talk about the suppliers for a minute. When everything went crazy, were they able to hold the line on contract prices like burgers, or was there pressure for price release?
Well,
Relief, excuse me.
yeah. So what I would say is not to get into our, our pricing strategies or things like that, but and obviously, you have the option of being on cash, or do you forward buy, do you take physical positions and things like that. What I would say is most of our contracts tend to be, term contracts, or have an index or something like that. So we didn't really have that many issues because it was already predefined in our contract. So if we were on a fresh market and that fresh market was up or down, we rode along with that.
So you took the hit.
We took the hit, and as you know, if you look at some of those commodity graphs, they're also probably as severe as the uptick was on some items. It was as severe a downtick as well. Yeah. Take block cheese, for example. So that was something that depending upon the commodity would have been a win or loss for us.
So would you say overall kind of balanced out for you, or minimal damage?
Yeah, no, I mean, and that's no secret. I mean, we report earnings. We just had an earnings call, and we were very close to prior year and what we had forecasted. So, underneath that, there was a lot of noise. I can tell you that there were some items that were definitely above our forecasted price, and some items that were greatly below that.
So let's talk about another difficult topic, and that would be guaranteed contracts. Whether it be, we talked about a month ago about soft drink contracts and commodities like coffee and shortening soybean oil, where you're out there hedged, or you've got a volume contract and now your system sales drop. I mean, how have the suppliers responded to those situations, and how have you had to deal with that?
Yeah, again, I keep coming back to something that might sound like the theme, but it really was a short-term issue, right? Because the first 15, 21 days, I was as panicked as anybody. We have these contracts, and they're volume contracts, and suddenly we don't have any volume. But we quickly recovered, and so it was a short-term issue and something that we're formulating strategies to try to address. But again, we kind of came back, and as you know, I know we're going to talk about it later. We launched a virtual brand, so we were more fortunate than others, and so I would say kind of the worst case scenario is we had some volume contracts where some of our suppliers had purchased raw material, and they had to change the delivery schedule from their suppliers. But if you look at it, over a 12-month period, maybe instead of that volume commitment being 12 months, maybe it's now 13 or 14 months.
So you just stretched it out.
Right.
Yeah. So this is a situation some of the mid-tier and smaller chains are really struggling with. Brinker has relatively successfully pivoted to delivery and takeout, including a new virtual brand called Just Wings. Talk about some of the stresses on your supply chain in finding products, packaging that travel well. You said the mix has changed, and what are you doing to enhance that guest at-home experience?
Yeah, absolutely. A lot of dynamics involve that. First and foremost, and if you think about it, if you're a restaurant company, right, probably the most glamorous category would be one of the protein categories, right? That's where most of your spend is, and so that tends to just have a little bit more cachet. And and if you're in casual dining, the person that buys packaging is not necessarily your premier buyer in terms of dollars spent, right? It's important, but it's not what drives your P&L.
I see where you're
Well,
going with this now.
yeah. So let's just say that I'm really really nice to our packaging buyer. He does a great job for us, but he has elevated in importance with us. And again, that's just because I mentioned before our packaging spend is up 200%. And yeah, and I have some experience in the QSR business, and I do know that there's a lot about packaging engineering and different substrates, and my brethren in the QSR world have forgotten more about that than we know. But we had to quickly suddenly become experts at that, and because it suddenly became, instead of just being 15% of your business and something like, yeah, we gotta take care of it. It's not going to kill us, right, or save us. I apologize. I have this light that keeps going off behind me, so I have to move.
We can still see you.
Okay, I have to move to keep it on. But so we're at 15% takeout sales, and then now it's 100% of our sales, and we've kind of settled to 50% right now. And so that was really challenging. And then on the virtual brands, the other thing that we had a test. And several tests, we felt like we kind of had a pretty good sense of where it would average out. And we were pretty close to that on average. However, if you got into individual markets, we had wide disparities, and that was the most challenging. So, we would go to our forecasting team, and they would go, gee, I don't know why you guys are struggling, in Utah or struggling in Michigan to keep inventory. We're within a few standard deviations of where we said we were going to be. And it's like, yeah, on average, but not in each individual market. And that was probably one of the biggest learnings that we had to get to, is to figure out where the markets are that we're going to do extremely well, and those markets that didn't do as well.
Yeah, you need to do it by DC when you're talking about inventory.
Exactly.
So a lot of manufacturers have been asking, are the chains actively looking for new products that travel well, or would you say it's more of a tweaking of the recipe or tweaking of the prep that's getting you there?
Yeah, it's interesting. So a couple dynamics there. So first of all, we have seen our mix change. And so intuitively, the guest kind of knows those items that will travel well, those items that will stand up in a DoorDash delivery. And so you can see the particular items that they're ordering in a higher percentage of in takeout and delivery versus what they would normally order dining room. Okay. And I'll just give you one small example. So one of the things that we're known for are fajitas. Well, if you go into Chili's and you order fajitas, you come out with the steaming fajita plate, and it's part of the show, and that's part of how we prepare it, and it's a great experience, a great product. But our percentage of fajitas in the dining room are much, much higher than they are takeout and to go. So just think about that presentation and what the guest is getting. And then you get it to go and deliver. You got all those component parts that have to be individually packaged. So it's just different. And so we didn't change anything in terms of how we menu or market, but our guests have kind of said, yeah, and they've made that decision for us.
So like on a dessert item, like a piece of pie or a piece of cake, are you looking for something prepackaged, or are you doing that yourself?
Yeah, no, we don't prepackage desserts. But again, it's the same principle, right? We have a couple of desserts that are multiple temperatures, like a frozen ice cream with are molten. We sell more moltens in the dining room than we do take out to go. So we sell a lot more cookies, cheesecake on to go and delivery as a percentage.
So let's talk a little bit about the new normal of operating restaurants. Have you had to go out and secure plastic partitioning, tents, umbrellas for outdoor dining? Here we just here in New Jersey went 25% indoor last weekend. So it's been all outdoor for me for the summer. But and still restricted in New York City, but rest of the country, it's been a bit of a mix. So why don't you fill us in on what that kind of challenge has been?
Yeah, so pre-COVID, we didn't have a tent buyer. We now have a tent buyer at Brinker, and it's been it's been challenging because it's just not something, where do you go to get tents, and then of course you have to, what specifications do you need, and so yeah, we've got a few items like that we've had to quickly learn how to buy, and in some cases we've actually used Amazon or Costco or something like that to get certain items, because again, if you're talking about, in our system of over 1,000 restaurants, and if even a third of them have a need for patios or outdoor dining, that's a lot of umbrellas, and so we learned a lot about umbrellas in a very short period of time.
Are those coming in from overseas, from China, or did you find domestic supply on that?
Yeah, everywhere we could get them. So,
okay, so the answer is yes.
yeah, yes to all those.
And I'm noticing plastic partitioning going up, even outdoors. I've eaten outside where we've had, side by side tables separated by plastic partitioning. So I imagine there's a big pull on that, especially with the kids going back to school. Has that been a problem?
I wouldn't say it's been a problem. I'd say that it, because just about everything that we've had to get in those plastic partitions have, for the most part, been custom made, right? I would say the issue has been to try to get the local municipality, city, or whatever the governing authority is to decide what it is that they're going to require, and then we have to then interpret some of those requirements, right? Now, where we have the latitude to put it up on our own, then it's an operations decision about which tables and which booths are going to put the partitions at, and then of course what those dimensions would be. So it would be great if there was just one partition that we had to get for 1,000 restaurants and 20 tables in each restaurant. Make our lives in supply chain a lot easier, but unfortunately that's not the case.
So you get somebody devoting a lot of time to that, I would imagine.
Yes, we do. Absolutely.
So as the weather cools, with the fall weather coming, is there going to be a run on heat lamps and all-weather tents? And is that something that's an issue for you?
Well, it's not yet, but obviously it's going to be. So we're trying to, and again, this is we're like everybody else, right? Do we want to go out and invest?
If you can hear me, continue talking.
We're going to be completely closed, or are we going to see over and we'll? Yeah, no, I can hear you. Your face is in a frozen position right now, but
you should be back.
Yeah, no, we're trying to do our due diligence, but obviously we don't want to make big commitments. With the hope and possibility that we could be in a post-vaccine world where it's not going to be as necessary.
So let's change gears here for a minute. Unfortunately for our industry, there's a lot of restaurants and suppliers that might not be with us next year. It seems to me from some of the calls we're getting in our office that those who have some budget and who are the healthiest are the ones who had some hedged business with retail where they did very well. How closely are you monitoring your suppliers' finances, and how important do you think that is for supply chain people right now?
Yeah, I think it's it's a huge issue. I mean, of the business impact of this pandemic, that's probably been the most distressing, is seeing the impact that it's had on a lot of our colleagues in the business, a lot of the companies that we've done business with and known for, in my case, decades, and to see how their companies have been devastated by this. That said, we've got to manage our supply chain. Job number one is ensuring continuity of supply. We've had to closely monitor some of our suppliers have been more adversely impacted than others, and where necessary, we're going to build additional contingency plans if we think there's any additional risk, due to a supplier or a plant being closed or something like that.
So it's unfortunate, but it's the business world that the hardships of some will be the successes of others as things shift going forward. Probably both in the restaurant space, where a lot of independents are going to get hurt, and the better capitalized chains will fill that gap. And I'm sure on the supplier side too, there's a lot of opportunities now for people who are in very good shape financially and can absorb it and move forward. So we're gonna finish up here by seeing how Charlie's 401k is doing. So Brinker stock prices, which were 45 in January before plunging to 17 in March, I checked before we went on, we're back up over 45. That follows trading in the 38 to 48 range in 2019. Well, I'm going to give you both of these. Well, let's start first with, how has the company managed such an incredible rebound? I would have thought going in that some of the older, more iconic brands that were losing some share to the hip, up-and-coming brands would struggle a little bit, and you guys have proven that wrong.
Well, first of all, we think of ourselves as being hip and up-and-coming. First of all, let me correct one of your assumptions. Our low is not in the 17s. Our low is actually $7. So
okay, missed that. So that might have been an intraday. I'm not sure if that was a close, but $7. Okay.
Yeah, I think we closed that day at 750, and I remember it like it was yesterday, John. That was a very dark time. But So first of all, to be very clear, because our general counsel is sitting right outside my door here, I have no idea where our stock price is going to be. But I would say, I think one of the things that we have done successfully, to quote our CEO, Wyman Roberts, is, we're looking at casual dining not as it being overbuilt, but we're thinking about casual dining as being underutilized. And I think that's really what has been behind how investors are looking at Brinker. First, fundamentally, as I said before, we were better prepared than some for the post-COVID world, because we were already leaning in heavily to a strategy of takeout and to-go. We'd already signed an exclusive partnership with DoorDash. So when it came time to ramp that part of our business up, we had the systems in place and the platforms and the relationships. So it was a lot easier for us. And we had been working on virtual brands for pretty much all of 2019. And so we would have launched this virtual brand when we did in July, regardless, COVID or no COVID. So we were on track to do that. And I think what we have done, and I think there's been other casual diners as well, to really kind of change the narrative on casual diners, chain casual dining restaurants, is that, hey, we've got all these kitchens that have capacity, and we have this new consumer channel of delivery and takeout. And, I think we've proven pretty successfully that the consumer doesn't care that this It's Just Wings brand is coming out of Maggiano's and Chili's kitchens. Because that's very prominent on the website, prominent on the DoorDash app, and the consumer notices it. But what they really care about is this a good value? Is it a great tasting product? Is it a good value proposition? And as long as you check those boxes, you'll be able to get sales with it, and that's what we're doing. So I think there's no question we continue to be below prior year, but there's definitely light at the end of the tunnel. And when restaurants are fully open, we think we're going to be as competitive as anybody for dining room traffic. But even beyond that, I think the way investors are thinking about Brinker, and I think the way they're going to be thinking about other casual diners, is that, hey, there's other business channels and growth channels available to them that weren't there last year.
And so moving forward, you think for the brand and for the industry that this is where we're headed?
Yeah, no question about it. I would tell you it's not as easy as just throwing some recipe cards together, and there's a lot of technology interface that has to be executed against that. We've got a best-in-class IT team, and so we think we've got a time advantage given how much we've invested and the work we've done on that. So just being able to integrate all those platforms. We've got a great operations team, and they've been able to manage this additional volume. So no question about that. It's a successful formula, and I think others are going to quickly get into the space if they haven't already. And so it'll be a new area where casual diners will be competing for share.
Okay, looking at some of our Q&A here. Hi, Charlie. During the slamming on of the brakes period of time, what were some of the key learnings for you and your team? Will you do anything fundamentally different going forward because of what you experienced?
Yeah, that is so the slamming on of the brakes, I've been doing this a few decades. Never had to slam on the brakes. I mean, you slam on the brakes for a hurricane, right? We've all done that, or ice storms or things like that. But nothing to this level. A lot of things that we learned, I would say, about relationships. And again, the one thing that I would say it reiterated and reinforced is you can have the most comprehensive 250-page document as a contract with your supplier, distributor, whatever. But at the end of the day, you get into a situation like that, it really does lean on relationships and trust to try to figure out solutions. So I don't know that there's anything that we learned that we could say, okay, we're going to fundamentally change how we go to market and how we manage our supply chain. Because as I said, there's only so much contingency planning you can do. And so there's certainly, like today, we know there's some things that we're going to be a little bit more strategic about, PPE and things like that. But for me, it kind of harkened back to a time when you said, okay, this isn't going to be solved by our legal team. We have to figure a way to do this, supplier to customer, and to seek out win-win solutions.
So we are actually pretty slim on questions today, and if nobody else is looking for Charlie's wisdom today, we can wrap it up. So Charlie, thank you so much. This is actually we're 40 minutes here, which is my ideal amount of time for a session, 30 plus 10 minutes of Q&A. So we hit it right on the money. And thank you everybody for tuning in today. We will be back in 2 weeks. I'm not going to announce yet who we got coming. I have to confirm it on Monday or Tuesday, but we'll switch off commodities and restaurants for a minute, look at something a little bit more demographically oriented, hopefully. And last reminder, sign up for Market Vision in October. So thanks, everybody. We're tuning out. Charlie, thank you again, and we'll see everybody in 2 weeks. Bye-bye now.
Thanks, John. Have a great day.